Hey guys, this is the market update. Some really great insights from Brian Brooks, who is one of the leading voices to push positive crypto regulation in the States. We're going to listen to what he thinks about Bitcoin as an inflation hedge and some really good education from him. Friday, Jerome Powell came out and absolutely walloped the market saying you will go lower. And we did go lower. Even the stock market and Bitcoin, yes, we sold off on Friday, but it's not followed through today. The stock market is cooled up as of making this video, and Bitcoin is, having this 20,000 as the support level. What's going on here, and why are we not going lower, considering Jerome Powell is coming out and saying, we're not going to save you, there's going to be job losses, and there's going to be pain. A lot of this has to do with essentially inflation expectations and where the market thinks that inflation is going over the short term. So let's listen to Brian Brooks first.
It should be above 19,000. It's still just a correlated asset with risk assets.
Yeah, look, Joe, I would take the other side of that. You know, we've talked before about the fact that the all-time high of Bitcoin happened about 4 days before the current Fed tightening policy took effect. And it's not about what inflation is. It's about what the market predicts inflation will be in the future. So if you believe the Fed is committed to a long-term tightening course, if you think we're going to see 75 basis points rising at the next meeting instead of 50, that kind of thing, that's bad for people who are short-term traders looking to think of this as their hedge. I realize that's complicated for a lot of people to understand because inflation is rampant. But the expectation for inflation in the future is downward because the Fed has finally gotten the message. That's what's hurting Bitcoin. In the same way that stock, it doesn't matter how well the company did this quarter. It matters what your forecast is of the next several quarters. And that tends to be good or bad for the price.
Markets, especially Bitcoin, are forward looking. And so forward expectations of inflation are what drives the price and not the actual current rate. Here is the next CPI figure, really important figure right here. So put this in your diaries. I think it's around the 12th of September, something like that. Very important. If this comes down and below expectations, the market is going to say, look, Jerome, inflation is coming down. And I'll show you some extra data in a second as well to show you that, look, the economy is really soft right now. And so Jerome, you don't have to be as hawkish. We'll look at that data now. If you want to get $4,000 as a deposit bonus on Bybit, I'll leave the link in the description. If you make a deposit of crypto or fiat, they'll give you a deposit bonus in your futures trading account up to $4,000, which is really good. But why is inflation expectations actually starting to come down in a serious way right now? Have a look at this. This is the housing market in the States. It is falling off a cliff. Interestingly, though, and really importantly, thanks to comparing debt levels with the 2008 financial crisis, what we'll see here is that the debt is different this time around. In 2008, that was because the debt was concentrated in the banking sector and the household sector in the form of mortgages. You can see that here. That is not the case these days. Where is the debt concentrated then? As we can see, today we have a bigger debt problem in the federal government. All right, so that feeds into not allowing rates to get very high because the federal government wants to debase their debt, right? Households can't debase their debt, but the federal government can. And that feeds into the narrative of Bitcoin over the long term, where a structural difference between the rate of inflation and the rate of debt that the government pays will always be wide. And therefore you get that asset price inflation. And that's what Bitcoin is there to suck up over the long term. But look at this. Concentrated these days in what we call consumer credit, mainly student loans. Wow. So what has just happened in the States? Biden has written off, $300 billion worth of student loans. Now that ties in very nicely to the fact that debt is concentrated in student loans. And so what's just happened? Literally a bailout of a certain sector of the economy has just occurred. Under the radar. Also, nice to tie that into a campaign promise and say, look, I'm, doing you a good job, buying votes, possibly, right? But what essentially it was a bailout of that part of the economy in order for there not to be a wider crisis. The market has taken this quite well and said, okay, there's going to be no crisis in that area of the market now, but that debt has now been nationalized across the whole economy, and that will lead to it, kind of longer term inflation. So really interesting dynamics here. We're at a level now, I think, over the longer term where the market has priced in most of a recession, but there can be way more to come. On the longer chart here, this is the Bitcoin chart over the long term. It's really obvious to me where the price levels are. So right now, yes, Bitcoin has priced in, a strengthening dollar and inflation expectations coming way down. And it's now consolidating around an area where the market is saying, look, we've priced in low growth and recession, and so we're going to wait and see how bad it is and how bad you are going to let it run in terms of the Fed before they step in. This is the recession priced in my opinion. Now, what can happen from here is two things. Firstly, the recession comes and doesn't blow anything up. We may get some chop around this level for a few months, 6 months, maybe even a year. Maybe we dip down and whatever, and we go back up. That's the first scenario, which in my opinion is probably the most likely. At least the market is pricing that in right now. The second scenario is obviously much worse, and something in the world economy breaks, and there is some sort of sovereign debt crisis, which is fairly looming in Europe, not so much in the States. Now, if a crisis happens, then obviously we're going way lower. And you can see crisis does force the price of Bitcoin lower. That was COVID right there. Other crises occur. Now, what happens after a crisis is the government steps in, of course, and that is when Bitcoin has its most outrageous rallies right after a crisis. If a crisis happens and something blows up and requires the government to really step in, Bitcoin is going lower, and then you're looking at levels, this level right here, which is not very strong as a support, but that was a resistance level here. It just happens to be around 14,000, call it 15,000 as a round number. And then if the crisis deepens, you've got a lot of trading around this level, which just happens to be 11,000, call it 10,000 as a round number. So if crises are stepping in, these levels could easily be reached. However, the market right now is pricing in a slowdown and a recession, but no financial crisis. So that's where we are at the moment. This video is definitely more about the long term and those structural changes in terms of the rate of inflation being higher than interest rates over the long term and regulation benefiting Bitcoin over the long term. Both of those things for me are kind of the long-term play of why Bitcoin makes sense and other cryptos that are going to benefit from this. This is the date though, really important that we see what inflation is. If it comes way below expectations, I suspect the market will probably like that because it means the Fed can obviously not come out and be so hawkish saying inflation's a massive problem, because if it isn't, then obviously they can change the way that they're communicating with the market. Make sure to get your deposit bonuses on Bybit and the other platforms. I'll leave all of the deposit bonus links in the description. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.